The Hedgeless Horseman here again, August 14th, actually technically 15th here in Sweden, in the year 2024, in the year of our Lord. Anyway, I thought I would do another video. It was like this meme. Anyway. Oh yeah. I mean, like Oliver here points out. I mean, the meme is basically gold price at record high quality, pretty girl. Gold junior stocks doing something weird. Kudos to him for that meme. And I just again want to point out that this is a somewhat outdated slide. I mean, it's basically this. I have seen a more recent one. I don't think I saved it though. But it's basically down around these levels. So this is commodities, S&P global whatever commodity index divided by S&P 500 index. So according to this ratio, commodities are as cheap as, well, they've ever been, at least back until 1975. And you can see obviously the cyclical nature goes from low to high to low to high to low to high to really low, or really high to really low to very high, and now extremely low. So and of course the S&P 500 cannot exist without commodities, and we know all the talk of, longer term there's a supply demand problem, especially for copper. I mean, nickel eventually as well, if the Indonesians start to running out of their laterite deposits. And I mean, for gold, etc., you already know the deal. I mean, we mine basically an entire Carlin trend per year. I don't see too many new discoveries. Yeah, so I mean, it kind of, I think it's, in some ways set in stone. And it's been undercapitalized, that's the thing. But we have these, for example, when it comes to copper, we have these giant mines that have been producing for, whatever, 50, 100 years. I mean, imagine when those actually run out. I don't know how far off it is. It might be 30 years. But still, the grade typically decreases because they mined out the best part. So it's like production can still go down. I think I've seen some metrics that, Chile's down in copper production and stuff. But the thing is, at the same time, that at least everybody is kind of aware. The mining companies seem very bullish on copper. So there's, some companies are doing something about it. Obviously, it's typically down to the permitting timelines and build timelines and all of that. I mean, we saw the giant Philo mining deal with BHP and Lundin Mining, but that's not going to be in operation for, I don't know, 10, 15 years perhaps. Yeah, so I mean, nobody's really spending a lot of money on exploring for zinc, for example. So we just know that it's not seen much in terms of investments, and it seems that the world economy just keeps on growing. And of course, if we look at copper, I mean, it's almost at all-time highs. Well, it recently was, I think, at all-time high. So we see the trend. There is a trend of higher copper prices. Obviously, when one factors in inflation, it might not look that impressive. But if we look at gold, it certainly looks quite impressive. Silver is lagging still, even though, I mean, from what we can tell, there's a huge deficit. Obviously, there's a lot of silver above ground, so maybe that's a bit muted. Point is that typically commodities have never been this cheap. Typically never been, I guess, less money in commodities and stuff. So when we think about where are we right now, commodities generationally undervalued relative to broader market. Okay, does that mean it's going to change tomorrow, next month, next year? No, it just says we're at an extreme, or an extreme low. We don't know when it's going to go up. It's like, why did it top here and not go even higher? No, who knows? Why didn't it stop here and actually went lower? Nobody knows. So it looks like some kind of flat line. I find it very interesting. Again, that it's almost like cemented itself. I think that's a sign also above, a sign for just how frothy the broader markets are. I mean, one could say, I mean, is it because commodities are whatever that low, or is it just because the broader markets are that high? That's up for debate, but we can. I mean, we know that the U.S. indices are pretty much at all-time high. I know the Swedish stock market is pretty much at all-time highs. Japan reached an all-time high and barely surpassed it, the high set 40 years ago. So I think we can kind of conclude that, wow, even zombie economies like Japan and very debt-riddled economies like the US, for example, that basically we ballooned this massive stock bubble around the world thanks to low interest rates and cheap debt and what have you. And money printings like the COVID, they threw out trillions of dollars. So it might be a combination of like very underappreciated commodities plus the greatest, let's say, debt bubble the world has ever seen on a at the same time. Let's say, I mean, there might be bubbles in some places and not in others, but now it seems that every basically Western economy, and I think including China as well, I mean, everybody has added a lot of debt to keep things going up. Basically a lot of money printing and basically a lot of inflation, and maybe it has shown up more in stocks than commodities, for example. So you have this weird thing here. Then obviously the question is, okay, if you have that kind of a party, what happens when reality kicks in? I mean, that's what we're going to find out one day. But you have that kind of a macro picture. Then you have junior miners generationally undervalued relative to commodities. And mostly, the most obvious ones are the gold juniors, because gold is at an all-time high. Copper juniors are very cheap. They look very cheap, but copper prices are not high enough right now that the projects typically look stellar on paper. I wouldn't say so, at least. I mean, if you have some of the gold developers with their PAs or PFS, if they put in 2,400 gold, their IRRs are insane, MPVs are insane. You can't really say that about nickel juniors. You can't really say that about copper juniors, especially not lithium juniors, I would say, and not silver juniors. So they might all be really cheap, like in 2015, that whoa, I mean, every single project is priced like they don't have a chance of becoming a mine, and the ones that have a deposit are priced like that will never become a mine. So they can be cheap in absolute terms, in like from a cyclicality standpoint, that hey, these have some value. It's not reflected, and even with the low commodity prices, that's going to turn around. So I can see the merit of owning lithium, nickel, copper, silver, and especially gold. But it's just gold right now has the highest margin of safety that I can see. I don't know, I mean, even a crappy project kinda probably works at 2,400. I mean, okay, maybe not, but I mean, in reality, maybe not, but like at face value, it probably does. But let's, I mean, there's no other way to put it. A lot of the gold projects look obscenely profitable at today's gold price. I mean, the majors, they have what, 1,500 ASIC. I mean, it's not like, I don't know this for sure, but I doubt the copper majors have that kind of a cushion to the current copper price. And same with most silver juniors or silver producers. Of course, there are exceptions like Silvercrest, which is very high margin. But on the in the broader scheme of things, let's say, I mean, most gold projects are right now on paper worth a lot of money at these prices. So I mean, you can only imagine, and this ties into this, like Nostra House of Gold says here, the entire move in gold this year has been purely a physical demand from the East. The West is yet to participate. And it's like, I mean, we who are aware of the gold sector and the gold miners, we can see that gold is at an all-time high. So we're excited about the gold price. But of course, if we look at the TXXV, for example, it's like there's nobody alive. There's no volume. There's nobody that thinks it's a good idea or it's a good place to put their money buying these juniors that might be trading for less than 10% on their MPVs at spot gold price. Why? Because they are trading that low. So that's all the evidence you need. So imagine this. Right now, nobody can even imagine a gold or a mining bull in the juniors specifically. I mean, Agnico Eagle is making all-time highs, and Alamos Gold is doing well, and some gold majors are doing quite well. You know, they have maybe some good dividends. The institutions, etc., can buy them. But if we're thinking about retail and all of that, retail is nowhere to be found. And it's like it's not even the West that is buying up gold. So the West does not care about gold yet. Gold is up, but it's not because Western investors are buying up gold. It's the East that appears to be buying up gold. So the West doesn't care about gold, and therefore they don't really care about gold juniors. Retail doesn't care about gold, therefore they don't care about gold juniors. They care about Bitcoin still, and therefore they care about Ethereum and stuff like that. I mean, the shit coins. I mean, they're not down 99%, which they should be, but they aren't, because they're kind of derivatives, I guess, of Bitcoin. In a sense, from a risk profile or how people view the risk profile. So picture this: juniors today, gold juniors, they might be pricing in a gold price of $1,600 per ounce. So that's like they are valued maybe like gold was at 1,600, and some projects actually have pretty solid, and the better projects have quite solid MPVs at 1,600, so they're not even pricing in that. They might be trading at 30, 40, 50% of that MPV, let alone $2,400 gold. So it's quite interesting that in a sense we have upside, especially in some juniors, quite a bit of upside, just to price in their projects using a $1,600 gold price. Okay? So imagine this is where we are now. We're starting, let's say, okay, we as junior mining bulls, junior mining investors, we assemble a portfolio of a bunch of cheap gold juniors that are pricing in $1,600 gold because nobody cares. In the eyes of the West, gold might as well be at 1,600 because they're not paying attention. Okay. Let's say the West starts to get interested when golds go to 2,700 or 3,000. Nobody knows. Everybody thought it would start exploding. The gold juniors would start to be pricing in the gold price when gold went through 2,000. It didn't happen. Then 2,100 didn't happen. 2,200 didn't happen. 2,300 didn't happen. 400 didn't happen. 500. I mean, yes, we have actually seen some moves, but it's just gone from pricing in whatever 6% of the MPV to like 9% or something. They're still typically ridiculously cheap relative to the spot gold price. So what happens if, I was going to say, nothing happens for the juniors really, okay, but gold keeps going. Let's say in 3 months gold is up at 2,700 or maybe up to 3,000 within 6 months, something along those lines. And you sit there patiently just buying and buying these cheap gold juniors, cheap gold. Eventually, at these levels, the Western investors starts to care. Maybe tech is doing poorly, or the crypto bubble is imploding. Nobody has any idea. Let's say they start to care all of a sudden. We see an uptrend forming in juniors, meaning, okay, this is it. The bargain period is behind us. We can't steal this amount of value anymore. The value to steal decreases as an uptrend forms, and that will, once an uptrend starts, more and more people will care, as always, because people care about the sector that has performed the best over the longest term, that longest time period. That's just how it is. People care mostly about junior miners when they have gone up for 3 years, not 1 year, and when they're at whatever valuation that's much higher than they were 2 years before, let's say. So the higher they go, the more people will buy. That's typically it. It generates more and more interest. So imagine a future where that happens. Nothing might happen. Gold goes up. For some reason, something happens, the Western investors starts to jump in. Maybe they start to drive up gold price as well then. So it might go to 3,100 or 3,200, whatever. And at the same time, they're starting to discover these gold juniors that have started to climb. Imagine the value gap that could be closed. Imagine gold is at $3,000 in 6 months. Again, this is a theoretical example. $3,000. Let's say the gold juniors start to update their slide decks and put in 2,500, 3,000, 3,500 NPVs. Oh my God, let's say again, cost inflation hasn't been that rampant, whatever. I mean, some of these projects would be worth, I don't know, 1.5 to $3 billion. I mean, I'm talking about, tier 2 projects basically. I mean, let alone the tier 1 projects, I don't know what they would be. But let's say 1.5 to $3 billion because, I mean, some are less leveraged to the price of gold. That's typically the higher margin projects anyway. So they're not going to go up that much. Whereas the, high throughput, lower margin projects are going to shoot through the roof in terms of NPV. But let's say that happens and we see an uptrend start to form. These juniors go up 1, 2 times. And they're still far away. It's like they haven't even reached maybe 30% of what the NPVs suggest at this theoretical gold price. That's a lot of room for people to be comfortable buying. Let's say a junior's priced at 100 million today. Gold goes to $3,000. They put out a new presentation. They show what their product is worth of $3,000. Let's say it's 2.5 billion. If that junior goes up 200%, it's at 300 million. There's still 2.5 billion minus 300 million valuation gap. So if you, I mean, since people are happy to speculate on stuff that's overvalued, it's like, oh, I'm paying 150, 200 PE for this tech stock or whatever, or crypto, which has no margin of safety. I mean, if you can look on a presentation as like, wow, this project actually is worth $2.5 billion today, let's say. You're sitting there looking at this presentation, it's worth 300 million. You see people making money. People are talking about the fact that it's worth $2.5 billion. How big of a leap do you think in a speculator, a junior speculator, how much of a leap? Like, how brave would they need to be to actually think that, well, if it's priced at 300 million and it's worth 2.5 billion, it's like, doesn't require much bravery, especially if you see an uptrend, especially if you see people already making money, especially if they're seeing a lot of people talk how much they're going to make in miners. I mean, we have no idea how high they, I mean, typically, I think, I don't remember 2011 bull market, but I think I've heard that, gold miners, I mean, they traded way above their NAVs, MPVs, whatever. So imagine if the sentiment got so frothy that some of these projects were pricing in an even higher gold price than the current spot price was, like the silver producers did in 2016, the top. Where it's like First Majestic, I think maybe silver went up to, I don't remember, maybe $32 or something. What was it? I actually don't remember. Anyway, maybe $32. But First Majestic was pricing in $38 silver. You know what I mean? I mean, it's like, going from severe undervaluation to actually pricing in a future, a high, let's say a tech company that's pricing in, a very high PE because they expect even more growth ahead. Imagine to be part of that kind of a gap close. And you have, this is kind of, the tailwind. That's like, what happens if gold goes to $5,000? What happens if copper goes to $7? That is how you create a humongous bull market in junior miners. And it's totally believable. It's, in my opinion, totally plausible that that's going to happen. Because A, they are extremely cheap right now, so we know there's a lot of room to the upside. B, typically at frothy tops, in euphoric phases, they trade at a premium to the current fundamentals, not at a huge discount. So if we start off with much lower prices, much lower valuations than the current spot price, and the spot price goes a lot higher, and fast forward to where we have a 1 year, 2 year uptrend maybe, and people feel really good about taking quote risk in juniors because they've seen so many other people make money, and then gold prices hit 3,000, 3,200, whatever. The West piles in, the uptrend forms, and again we have a gap close in terms of valuations from 1,600 to 3,000, and that's just to get to neutral, fair value. Imagine if gold goes even higher. Imagine if we actually get a speculative premium on these juniors. That is how you can literally see. 10 baggers, no problem. 20 baggers, 30 baggers, yeah. And that depends. If gold goes to 5,000, whatever, it's like, we have no idea. But this is not, in my opinion, a huge stretch to imagine that this could happen, because it should happen, because it typically happens like this. A cyclical sector goes into a deep bear market where valuations get extremely low. Sooner or later it's going to reach a bull market peak, and the delta between that is enormous. That's why you see these juniors do 500, 1,000, 2,000% from bottom to top. So this is the big picture, in my opinion. Whereas most people sit there and watch the tickers every day and comment on every daily ticker moves, like, oh, it's up 5% today, oh, it's down 10% today, Jesus, fuck my life. Oh, it's up 10%, woohoo! It's like, that is not something I am cheering. You don't see me cheer a lot of daily moves or even weekly moves. This is if I will consider this a successful venture, let's say, when this stuff happens. When these juniors are up 500 to 1,000%, that's what I'm in for. This is why I'm in this sector. This is the future I see in some way, shape, or form playing out. And by definition, if you bought something dirt cheap, you already know you didn't make any mistakes. I think my portfolio is extremely undervalued at today's gold prices, let alone higher gold prices. And again, sentiment typically swings from huge discount to premium. Now we have the largest discount to value this sector might have ever seen, or at least in the last, 20, 30, 40 years or something, if you listen to some old timers. So imagine if we go to a higher gold price and a premium to said gold price. It could be absolutely biblical. This is a good one, I think, from Ian Castle. He's a kind of well-known, micro-cap investor. I don't think he does too much in mining, but I think this is just a great tweet. This is a seriously successful investor who's probably been investing for 20 years or something, and had good profits. Look at the timeline. Winning normally looks like sitting on dead money for 1 to 2 years longer than you thought, and then having the stock triple in a month, being too early and being forced to wait for a few more quarters, a curse in the short term, but a blessing in the long term. It forces you to form a deeper conviction in what you own. That's basically how I feel for this entire gold sector, for my entire portfolio. I thought they were cheap 2 years ago. I thought they were even cheaper a year ago, and I was expecting, higher prices at any moment. 2 years later, they're even cheaper. And at the end of the day, I expect to make more money from gold juniors, from the bear market lasting 2 years longer than I thought, than if it had bottomed 2 years ago. Because there's much more upside from these levels today than from the levels 2 years ago. And my portfolio has just grown and grown because I put in more money all the time and have, some good stock picks here and there that basically, buffer the many losses, let's say. But think about this. This guy is like that's typical. He describes this as, what it normally looks like, that it takes 1 to 2 years longer than you thought for the value to be recognized by the market. And yet again, if you look in the junior space, because it's so volatile and everybody's in here for 10 baggers tomorrow, people bitch today, they might calm down. If gold is up a bit, they might calm down tomorrow. 2-3 days from now, if they haven't moved up, they bitch and they bitch and they bitch, and everybody bitches every day, every week, every month, because it's always, it's never soon enough. And I've seen a bunch of people complain that they haven't gone up in well, technically we've been in a 4-year bear leg. But the point is, the time horizon people have in their heads, it's totally whack. And believe me, I can identify that in, cases I have. I'm so excited because they're so cheap, and it's like, I buy it and I'm like, everybody must see how cheap this is. This is going to return a 3-bag or a 5-bag. How on earth is not more people buying this? Because it's an easy 3 to 5 bag, or even if you buy it up 100%, it's easy going to be a 2-bag or whatever. It's like good as well. But that's not what happens, obviously, typically. And also sometimes news takes longer. It's like, okay, you drill a month, 2 months for assays, and you drill some more and more assays and what have you. It's like, it's hard to prove up a multi-million ounce discovery in a month or even in a year, if you know what I mean. This is an interesting one, in my opinion. I just looked at them, quite recently, 9th of August. Mandalay Resources, who owns the Björkdal mine, east of Barsele in Sweden. So it's basically the same, what is it, latitude? Yeah, I think so. As Barsele. It's in the Skellefteå mining belt. The Boliden district, just off to the east. Organic gold, if I'm not mistaken. So the last quarter, they showed an all-in sustaining cost of $1,553 on a head grade, or average head grade of 1.34 grams per ton. Their underground mine reserve grade is 1.5. I actually think it's lower than that. I looked recently. And I posted that in the First Nordic channel, and someone said that why do you point that out? There's nothing to write home about. That's around the all-in sustaining cost at Barrick has, for example. Why I posted that is to show the fact that, or point out the fact that the Björkdal mine is mining stuff that's around half the grade of Barsele, and the widths are narrower. Now, I don't know, there's a mix of actually stockpiles and stuff, so who knows, there might be some shenanigans in a sense. But my point is, they have an all-in sustaining cost of this, which is actually nothing to sneeze at in today's mining world. I mean, most of the major miners, that's around their average. They do that on sub 1.5 grams per ton underground and some stockpiles. That is absolutely crazy. There is no, barely a mine in Canada will make money on 1.5 or sub 1.5 underground grades. That would be like Goldex. I think they're one of few bulk underground mines, and that's a bulk underground mine. Björkdal is not really a bulk. They don't have the widths like Barsele or Goldex. So what does that mean? It's like Barsele has around twice the grades and double the widths. And you know, yeah, my conclusion, Barsele is going to be a 3 to 5 plus million ounce cash cow. Because I just simply reverse engineers the all-in sustaining cost and got it using Barsele grade of 2.7 grams per ton. It would imply, and of course I'm making some assumptions here. It's like I don't know how much came from the stockpiles. There might be a slight difference in some stuff in terms of recovery costs, even though Barsele 40-50% is recovered via gravity, so it should be very cheap anyway. But still, I just use these numbers at face value. That would give Barsele an implied all-in sustaining cost. I think I got it to $853 per ounce, somewhere along those lines. That would be one of the best mines in the world in terms of costs, gold mines. Especially if we're talking, you know, a 170,000 ounce produce. I mean, that's not only is Barsele pretty big in terms of, you know, if we're thinking a production profile of like 170,000 ounces. I mean, there's not too many mines out there that will produce above 200,000 ounces, especially not with the cost profile like this. But even if you round that up, assume some stuff, it's like $950 to $1,000 all-in sustaining cost. That is what I think Barsele will have in real all-in sustaining costs. And you have a lot of gold developers out there. It's like every single one on paper appears to have 1,200 or lower. It's like, yeah, but that's on paper and all of that. This is a high quality project. Björkdal is a mine right to the east, also incredible infrastructure and all that, and this is a much better ore body with higher grades and wider widths. So I think this is much more probable than a lot of PEAs, I would say, my thought experiment here. And yeah, I mean, in short, Barsele, even though everybody's sleeping on it because it's not located in Canada, and the Canadian sector, TSXV, is sleepy as it is. But it's even more sleepy when it comes to a project in Sweden. Because this is, in my opinion, and Tasha said that himself, this is one of the, in his opinion, top 10 best projects out there that's not 100% owned by a major. Agnico owns, 55% right now of Barsele. And again, they just became the largest shareholder of First Nordic. So it's like, I've shown my NPV calculation. So I think at spot price right now, at 5% discount rate, I think Barsele is probably worth $1.5 to $2 billion, and the First Nordic is trading at 73 million or something like that. So this First Nordic is obviously one of my higher confidence cases, where it's like I don't see how I'm not going to make money on it. Hopefully a lot of money on it, because I think it's one of the most undervalued gold juniors in the entire space. Might be the because their project is, the Barsele project is, in my opinion, that good. So there's other stuff out there with higher or more ounces, but the deposit quality is, my opinion, doesn't look. I mean, it's more leverage and all. This is a high quality mine. This should make good money, and even if we had a huge correction in gold prices. So I think this is a tier 2 mine, could become a tier 1 mine. I think this is something that Agnico Eagle is going to buy it out, because they get a huge land package, so they can have a regional operation. My fear, actually, I mean, sounds silly, but a fear I have is that Agnico is going to buy First Nordic. Even if they pay 50 to 100% premium at these levels, I think they're stealing it. And that would be a bit of a shame, because I can see, I mean, in my mind, I see First Nordic reaching $500 to $1 billion market cap in the future. So if it would be bought out sub 200 million, I would feel a bit shortchanged. But hey, I mean, you would get more money to reinvest. But still, I mean, this is one of my highest conviction cases. I'm biased and all that, as you know. Case in point, this is gold producers Q1 all-in sustaining cost margins. Equinox 1950, Goldfield 738, Harmony 1590. It's just, where's Agnico? 11. I think they went lower actually in Q2. That was recently announced. So I think they were around 1100. I think Barsele is going to be down here. Basically would. Yeah, I think Barsele would be a flagship project for a mid-tier. It would have a pretty big production profile plus very good margins. You could, I mean, as Frank Usra likes to say, I mean, a mining company starts with one good mine. So, in a sense, I think it's almost a bit of a shame if Agnico ends up buying out First Nordic, especially on the cheap. If they pay $500 to $1 billion for it in 2 years, fine. I mean, I can live with that. But it would be cool to start a new mid-tier around Barsele, actually, because they have so much ground that they could actually, I mean, let's say they find 1.5 million ounce deposits and have a production profile of like 500,000 ounces over 10 years, and then Barsele would keep going after that, obviously. But that would be really cool to have a mid-tier formed around Barsele. Javier versus, this is just a slide to point out. Okay, so these are the largest undeveloped gold projects in Australia, and as per them at a superior grade. So I mean, Barsele, if I just redo the cutoff grade to $1,700 gold, it's already at 3 million ounces. I think it's going to be 5 million plus. That would put it at, if Barsele would be in Australia, I think it would pretty quickly, if somebody has drilled, 30-50,000 meters, I think it would place itself in the third largest gold deposit if it was in Australia. This is not a news from the company, but here an interesting thing from District Metals. Sweden considers borrowing $2.8 billion to finance nuclear. State-owned Swedish group Vattenfall has said the earliest a new reactor could come online is in the first half of 2030. So that's interesting. Obviously, that should be, a bonus to the Swedish uranium juniors. Now, the moratorium has not been lifted yet, so we can't take that for granted. But I mean, when they talk about stuff like this, then you almost kind of, in my opinion, know that they're going to lift the moratorium. So I don't know what's going to happen, but it would sure be nice to have some domestic demand. And again, from a strategic standpoint, Sweden has all the uranium Europe, especially Sweden, would ever need. Of course, like people point out, the Viken deposit is very low grade and all that, but there are higher. I would think there's higher portions of it. They have other projects also higher, so it's like, who knows what could happen. Good sign. And also we've seen some buying recently from the CEO, Garrett, also Doug Ramshaw, Mineralamos, and apparently Joanna Cameron. I guess that's exercise of options, right. Okay, added 50,000 because she sold 100,000. So net addition at least. And so yeah, I mean, district has corrected from the top of 50, so it's almost cut in half. So it's like, okay, they think it's cheap again. And let's not forget about the Boliden assets or JV. Goliath Resources receives $2 million order from Suchi Singapore based global commodity group, and the previously announced has been increased from 3 million to 6.5 million. So I mean, this is what I talked about in the, not the last video, but maybe the third last video or second last video. That it's obvious, like Goliath is aware of how the crappy market works at times like this. When, and I said as much, that's like, if some entities out there assume that, oh, they will need to finance, I can wait for that, I'm going to keep I don't need to rush and buy, because hey, they're going to do a private placement, then I, as a hedge fund or whatever, I can easily get in. I might as well sell shares now and short them maybe and get my position back. But now that might not be happening, because this is what the upsize of a second placement plus a new addition from a Singapore-based commodity. So this will get them 8.5 million already, and I think they already raised some money, if I'm not mistaken. So I mean, yeah, I mean basically $8 million. How much more drilling can they do? So it's like, they're probably just gonna go balls to the walls here and drill the crap out of the obviously the Shorebed project and the whatever, the Bonanza zone and all of that. So it's like they are trying to go into a new to go out of orbit, in my opinion. Because this, with $8 million, there's a lot of risk to the upside, because they're gonna use that to drill. So we don't know how many holes they will put out, and we don't know exactly where they're gonna drill everything and all that. But it's like, imagine if there's a carpet bomb coming over the next 3, 4, 5, 6 months, let's say 6 months of a steady stream of assay results, and you have some of these. I mean, they've already announced one interval from one hole which ran, what was it, 35 grams per ton AU equivalent over 6 meters, I think so. So imagine you just boom, boom, boom. Imagine you have 30 news releases coming with like high grade to bonanza grade intercepts. I think there's a risk that will create enough energy that it goes out of orbit, in a sense, that it pushes through, because again, there's a lot of risk to get left at the altar in that case. If you just assumed, I'm not going to buy in the open market because they're going to be forced to do a placement and they have to come to me. All of a sudden now you're sitting there looking at this, well, this looks like it could be a big deal, this project. Oh shit, I didn't get into the placement, and now they can drill for 8 million more, which means there's an even higher likelihood that they can reach critical mass in terms of excitement from the drilling. So the prices might go up. So I don't even know if I will be able to get in a placement, or at what price in that case. What if the stock goes up 50%? And then they might have proven so much that it's like some big money, whatever, or strategic or something gets in there and I'm left out. So I like this. Like, this increases the threat to the upside, which forces people who are used to shorting and whatever, covering in the placement, or just hoping that the market will suck so much that, they put out a few drill holes, but I can buy it back later because the market is going to know that the next news release is going to be about money. No, they are front running this by raising the money now while they have a crap ton of assets coming. So it's very smart from Goliath. This is very, very smart strategic move, in my opinion. They understand how the markets work. They understand how the capital market players can basically mess up your share price and all of that. Yeah, no, I really like it. Again, I hope this will be enough to really have Goliath to maybe get to that aha moment. It's like, oh crap, this is actually, this could be another great bear or next Pogue or something like that. Altamira Gold provides exploration update on Maria Bonita discovery. Cajero project discovers new target at Apiacas. Results of the final 2 second round diamond drill holes at Maria Bonita returned 32.7 meters points gram per ton and 46.5 meters blah blah blah. Let's see, do they have the, okay, from okay, I mean, starts at surface. I mean, yeah, no, I mean, this is great. I mean, from a heap leach perspective, this should be highly economic. Starting at surface. I mean, okay, it's not, well, it's actually pretty good. I mean, widths and grades for a heap leachable project. I wonder if some of it should be in the saprolite, I guess. Yeah. Anyway, this might not look too exciting, but if they could prove up more of this stuff, then you have a low capex mine, basically, I think. Recent surface sampling at the Casablanca target area of the Apiacas project returned highly anomalous gold in all surface samples collected. 10 grab samples all contained gold greater than 0.5 grams per ton, average 14.5 grams per ton, with 2 high grade values of 69 and 52 grams. So that's bonanza grades. Mineralization of the Casablanca occurs in pervasive sericite altered porphyritic intrusive host rocks containing clots of puritic sulfide similar to zones of gold mineralization at the Mutum target. Let's not forget, I hope they have a close-up of the Mutum target. Well, I guess not really that close. I wanted the picture where you can see all the alluvial workings, because this is a very large project. Apiacas is even larger than Cajero, and there's basically alluvial or artisanal gold mining all over the place here. So something is shedding gold all over the place, and this is the scale bar. So there ought to be something, I mean, let's say there's potential for something very big to be the source of all that gold up at Apiacas. And they're already, Maria Bonita is already discovered at Cajero. And you can see, I mean, as we know, that Richard Silito has basically concluded that yes, it's porphyry. Maria Bonita is a porphyry. Well, okay, I don't know exactly. I think this is actually the belt. So here you have this kind of belt, and this obviously is on the southern side of this belt, and I mean they're kind of on trend. I mean they're at the same latitude at least. So I mean, why not? Maybe there's maybe there's a porphyry belt going on here, and it's like outcropping, because how otherwise would you have so much gold shedding from surface? Mike Bennett commented, the result of these 2 last drill holes at Maria Bonita discovery confirmed that the porphyry gold deposit carries consistent gold mineralization from surface. We're working through the interpretation of the 3-dimensional geological model to define potential zones of extensions or repetition of mineralization for further drill testing. The mineral system remains open in several directions and at depth. Our new Casablanca target at the Apiacas project is again intrusive hosted with disseminated gold mineralization observed on surface. Further mapping and sampling. So, conclusions. Maria Bonita, wide open. They only done 2 runs of drilling, and they didn't even drill deep. Again, it's hard to get a 300-meter intercept if you don't drill 300-meter holes. But I mean, understandable. They want to prod it. It's like, scout drilling. They grid drilled it to see, okay, where do we think this system goes? Because it's an old system, so it's probably been, whatever, morphed a bit and bended and what have you. That makes total sense, but it's like they're still drilling potentially the tip of the iceberg over at Maria Bonita, and with 0.53 starting from surface and 0.5 starting from surface, that should be no problem to make actual cash flow on that. That's my estimation at least. So I think you have a really good low capex starter operation if you wanted to, and then obviously they have 700,000 ounces in the central deposit in the Cajero project southeast of Maria Bonita. But Apiacas is basically the sleeping giant. We don't know what's gonna come out of there. We just know they have the scale kind of fools you because honestly, I see some presentations for juniors. They show a project map and it's so zoomed in, so you think, oh, this looks like a large project because the project goes from here to here in the slide, and then you realize, this is like 400 hectares. This is enormous scale, huge scale. So they have 3 true district scale projects. They have a bunch of porphyry targets down here. They have now what appears to be a porphyry up here. They have the central deposit, and then we have Apiacas, which got Quinton interested in the first place and got me interested in the first place, because again, it's like, how do you have that much gold shedding all over the place without there being a source? And who knows, it might very well be like Maria Bonita, that there are there's gold-rich porphyries that have been eroding here. So assuming there's the source of the gold is there, it might be near surface porphyry bodies. And obviously you make typically a lot more on near surface porphyry bodies that you can open pit than, the quality needs to be a lot lower than if you have them a kilometer at depth. So I think this is just starting. The stock has been punished heavily. I don't actually know exactly why. I think it's down to $19 million. I think they have maybe, what can they have? 2.5 million cash or something? 2 million cash. I'm very much looking forward to. Well, let's put it like this. I would really not mind getting some, bids filled in this. But that's not my problem. Is not to find buys or even screaming buys. My problem is getting more money so I can do it. I want to add in every single holding I have. Obviously, I only hold stuff that I think is cheap right now and think are, to me, buys right now. So by definition, I would want more of all of them. Then I also have stories that I really like and don't even have any money for. So as soon as I get money, I have like 40 stories I would happily add to. This is one of them. So maybe it's the market. Somebody figures that they're gonna raise money, so I'm gonna slam the price or whatever. We don't know, because I personally don't see how. Where is it? This has major potential. This is, in my opinion, an absolute ridiculous valuation for a company that has 700,000 ounces of gold near surface, has a new discovery at Maria Bonita starts near surface, wide open, has the huge Apiacas project where they're getting grab samples like this, and there's gold shedding all over the place, and the project is huge, and they have Santa Elena, which is also a huge project with some obvious porphyry targets. How that comes down to like a enterprise value of 17 million, I have absolutely no idea. In my opinion, the blue sky is huge, especially from this market cap. Are there any guarantees? No, but I think this is just the market being silly. Someone might be playing games hoping to get into a placement and maybe actually driving down the stock. Doesn't really matter. I mean, let's say they raise 15 million here, 5 million here. It's like, okay, wow, the market cap goes up to 24 million. It's like, who cares? This could be big. Yeah, my point is that when the sector is this cheap, it doesn't really matter. I mean, if they prove that Maria Bonita or Mutum or whatever, I mean, to show that, oh, you know, there's a multi-million ounce deposit here near surface, assuming good metallurgy. It's like, doesn't matter if it starts at 19 or 24 million. That's chump change. I mean, they have, you know, if Maria Bonita turns into a serious discovery, for example, and they already have 700,000 ounces, I mean, what's the threshold of actually making a mine here? That's quite low capex. I think it's quite low. So this was kind of interesting. Goldfield buys Canada's Osisko mining for 2.16 billion. This was the big news this week. The funny thing, after this happened, almost every advanced developer, especially the multi-million ounce ones, every one of them went up. Like 10, I think Bonterra, for example, which is Osisko's partner, because Osisko basically has an earning deal with them or something. I think it went up like 35% or something. I think Integra Resources went up like 25%. I-80 up 12% or something. All of the ones where it's like, you know, somebody has to buy these projects someday because they are the only multi-million ounce deposits around. Especially, you know, let's say if you're Canada focused, because this was in Canada. So I don't know exactly why. I mean, I don't know how much of it was short covering or people figuring out like, oh right, this sector is insanely cheap. And the funny thing is, I just talked about this on K Report today. I listened to some Osisko mining presentations. I listened to one with CEO John Brzezinski. I think that's his name. And it wasn't too long ago, and he said that I think they had a market cap of $1 billion or something, maybe 1.1, 1.2. I'm not 100% sure. But he basically said that, well, almost our entire market cap is backstopped by either the cash or is made up of the cash we have, some deferred taxes or something. I don't know exactly what it means, but like I guess that's tax savings, future tax savings on the mine, and equity positions, and maybe that Goldfields was supposed to fund 400 million more, somewhere along those lines. Meaning that's like at face value, because Goldfields was buying 50% of the, or owned 50% of Osisko mining already, including obviously then the Windfall deposit. And so it's like at face value, you get 50% of a multi-million ounce high grade mine in the Windfall, drilled by the Osisko guys, plus an absolute humongously large land package in Canada for almost nothing. Now, okay, the market cap was around 1.1 billion, but I actually bought some after listening to that interview and a few more. Bought some for a HODL portfolio, the lowest risk one. Well, I think this happened. This announcement came 2 days after. That is the quickest. That is the quickest payoff I've ever had on a buyout, at least. But it just goes to show. This is the deposit. It's like almost, I'm not going to say almost the same, but it's like, so the red and pink are measured and indicated. Measured and indicated 4.1 million ounces, 11.4 grams, inferred 3.3 million ounces of 8.4 grams, so that's 7.4 million ounces total in the red and pink. That's down to 1200 meters depth. They have shown with their deep drilling, I was there actually on a site visit when they drilled this. I don't remember what it was called, but V1 I remember. I have some sticker at home. So this was an incredibly long drill hole. I think it was around 3 kilometers. Went down past 2,400 meters. And they hit 4 meters of 5.25, 2.3 meters, 10 grams per ton. And they've hit deep hits like this, 22 over 41, 81 over 3.5, open. So they have 7.4 million ounces down to 1,200. And they have proof that this system continues to maybe, well, some loads at least, to double that depth. And if you listen to the, John, for example, I mean, he thinks this is going to be a, generational mine, basically. Imagine if there is like 15 million ounces or something. This could be mined for, decades to come, basically. This is something you could certainly build a mining company around. You have a flagship project. Hopefully it's going to be low or high margin. Yes, I mean, the grades are stupendous and all that. But again, this is, I think, some pretty remote part of Canada, and this goes back to, I mean, many places in Canada you have to have much higher cutoff grades because it's much more costly to do things in remote parts of Canada than, for example, at Barsele. But my one point is, they get this that is, proven. They probably haven't shown that this load gold system goes down to at least twice the depth. Barsele is drilled to an average of, 525 meters or 400, somewhere along those lines in terms of the average deposit depth. That's around this level. Windfall is already drilled to twice the depth of Barsele, and they've shown that it probably goes to twice the depth again. So over four times deeper than the current Barsele deposit is. And these orogenic gold systems can go down for kilometers, and we know the geophysics from Agnico's suggest that there's no rock change until at least 2 kilometers. That's why I am so excited about Barsele, because the Barsele as you see now is, in my opinion, probably just the tip of the iceberg. If they just double that, almost on par of what Osisko has done at Windfall, then you would get kinda probably 5 million ounces plus. And then it could go even more than that. And obviously there's the Riesberget deposit and all the other exploration potential. And let's not forget, they also get an absolutely humongous land package. I don't have a scale bar here though. I think so. I think this is around 100 kilometers or something. So that's on par with the Gold Line Barsele strike, even though this is thicker. But it's like, think about this. Goldfields is buying a decade-long, probably high margin gold mine and a land package that could keep them busy for 100 years. That is forward thinking. And the market, according to Goldfields, was at least 55% off in its valuation for Osisko Mining. And Osisko Mining is not an unknown story. Osisko Mining is not some boutique retail play. So you can only imagine what some of the actual illiquid juniors in the sector are, how cheap they are. Because again, Goldfields paid 55% more than Mr. Market, more than Mr. Market was giving it away for, and obviously Goldfields think that they are getting a steal. So they're saying that this is at least worth 2 point whatever, and that was for the other half of. Of course, they paid themselves back kinda because they get cash and they were gonna fund something anyway. So I mean, it's not like they paid full price for it, but still, it's a nice look. And on that note, I thought I would just end with some developers I've been looking at, because like I've explained, that the cheaper this sector gets, the risk reward for the proven ounces goes up. the risk reward for the proven ounces goes up, because maybe you can buy ounces in the ground for $20, but it costs you $40 to pay a drill junior to prove it up and stuff. Especially if you add the timeline of permits, then it could be even time and money. But anytime any sector in the commodity space is down around 90% or whatever, then you should really start paying attention. You can see what typically happens not too long after they're down 80 to 90%. I'm not saying, I mean, they have merged with another company, so it's not like this has been the same story for all this time or anything like that, but you still have the same pattern. Absolute decimation down 85 to 90%, and then you have absolute, truly obscene rallies that come after. Yeah, it's crazy. It's crazy, and again, that's the thing. People think they, whatever. It's like, oh, you bought here. It's like, yeah, and they feel stupid when it drops 50% more or something. It's like, oh Jesus, what an idiot, and everybody's laughing at me. Everybody's telling me I shouldn't be in miners. So it's like, yeah, you can either do this, like, oh, I'm at least gonna hold. I'm at least gonna hold. It's like, good on you if you do that. I mean, most of the time you'll obviously end up making money, and quite a bit of money in not a long time frame. I mean, 3 years for 250% return, that's absolutely fantastic. But obviously when it goes, I mean, the future returns just go off the chart basically. So what I tell people, that I see some who are like, well, I'm gonna try to stick it out, I'm not gonna sell. It's like, you're not gonna sell. There's 3 options at any point in time. That's buy, hold, or sell. When you go into extreme lows in a cyclical sector, selling is exponentially worse than holding. And people think that holding and buying are the same thing. It is not. It is absolutely not the same thing. Holding is exponentially worse than buying at sector extremes, at sector lows, at extreme lows in a cyclical sector. If you have one guy, he bought, and I've showed this before, you have one guy, he buys the top, holds down here. Let's say he can muster up the strength to actually hold. Let's say we're going to hit this level. Let's say we're going to hit this level in 2 years. I'm just guessing it. Okay, in 2 years. You have one guy that sells. He's out. His portfolio, 2 years out, probably is going to go in and buy another sector high again and destroy even more wealth. That's the thing. I freaking hate when people call paper losses like, you're destroying wealth. Oh, so if I bought here, held it to here, people are gonna, you're destroying wealth. Well, fast forward a year or something, all of a sudden you created wealth from the same buy. Anyway, so you have one guy sells, so he's minus 84%. You have one guy you have one guy that holds it, so he's gonna go back, get back sooner or later to the same one, to the same level. So he makes absolutely nothing. Still much better than minus 80%. And then you have the guy also started buying high, but he bought more and more and more and more and more and more. I'm not saying should do this with STLR Gold. I'm saying for the sector overall, the intact place and all that. Okay, bought more and more and more and more and more. Eventually, maybe his average is down here. Let's say here. Okay, down here. So how much does he make when the stock gets up there from having an 84% loss on the first purchases? He's down on every single additional purchase up until the low here, but on average he has mean buy here. He still makes 93%. If that happens over whatever, 3 years, that's a good return. 4 years, that's pretty good return as well. I know that's not why people are in this sector for. I'm just saying, objectively speaking, 93%. The broader market averages 8 to 9% per year over the long term. So if you get 93% in 2 years, you're obviously getting much more than the average market should return over the long term. So it's absolutely not a bad thing. What you should do, obviously, to the next cycle is, first of all, you should buy as much as you can when they're cheap. It's just gonna, I mean, the worst mistake you can do is to buy high and sell cheap. And slightly better than that is buy high, hold low. Absolutely best is obviously, if you bought high, is buy even more low. But so STLLR is interesting. They have like 18, 19 million ounces on the books, super beta, and you can see kind of the same. Again, it's not the same story, but I think they took over the Moneta Gold share price or stock. I'm not 100% sure. But so I'm just assuming that this has been a leverage play for quite some time, because it has behaved like a leverage play. That, you know, ounces in the ground goes for, I don't know, 80 bucks an ounce, and down here it's like 5 or 10 bucks an ounce or something, and then, you know, 5-10 bucks, and then 80 100 bucks, and 5-10 bucks, and all that. Pretty simple stuff. I haven't read up too much on STLR Gold. It's just that it's an obvious beta play. 2 projects, one in I think both actually are in Canada. Huge deposits, leveraged. STLR Gold, yeah, leading Canadian gold developer, blah blah blah. Again, these are not like super high conviction, but I have added some for the HODL portfolio as well. I think, yeah, a smidge. And again, I wasn't interested in these kind of stories up here. This is when you kind of need alpha and concentrated portfolios. Down here, it's the peak merit of diversification and beta. That's one thing you have to learn, basically. You shouldn't pay for stuff that cannot get better up here when they're priced like perfection. If you buy a whatever discovery up here, or something that could grow a lot, I mean, even if you go into a bear market, they can actually do okay. And then when the sector goes down in this shit, you can simply value shuffle to beta. Another one that I've been looking at, Nexgold. It's a merger between Black Wolf Copper and Gold and treasury metals. I have looked at treasury metals quite a few times. One of the most advanced projects in Canada, that's 2 million ounces. Yeah, they weren't getting too much traction. I mean, the project looked really, you know, pretty good on paper, actually. And again, it's in Canada, and they've come a long way in permitting. So they're not actually too far off from being able to raise money and you know, start building a mine. Which you can't say about most 2 million ounce deposits out there. I mean, they have like 3+ million ounces on the books, actually. But with the merger, Frank Goostra is now the main backer, one could say, in Nexgold. So, and you also see how everything is kind of changed. Frank Goostra is famous for building, buy and build, as he calls it. Starts with a mine, it's him who says, you know, every gold company starts with one good mine. And then he typically, like he did it with Wheaton River, that later became Goldcorp, took it from 100 million to $50 billion after the mergers and all that. Endeavour Mining, he was a founder of as well, and has done very well. He kinda did it with Leagold, which is sold to Equinox. He's doing it with Aris Mining in Colombia right now, which is set to become a 1 million ounce producer. So he typically starts with one asset in his place, and then they roll up other projects, put mines into production, just grow and grow and grow. And if you listen to some of his talks, he's like, you know, aiming for 1 million ounces of production per year, and then to get sold, basically. So you can imagine if he's able to do that in a bull market. So I just note that this is the first slide, the next mid-tier gold producer in the making. That's not something you could see in the treasury metals portfolio. So you can kind of, I mean, yeah, and when I've listened to Morgan, I don't think he's the CEO. I think it's the chief development officer, somewhere along those lines. You can kind of tell that, you know, they now have big plans when they have Gustra as a backer. So I like those stories because, according to them, they want to become a 200 to 400,000 ounce producer. I think within the next 3 or 5 years or something. They have, I think Nexgold has a market cap of 65 million right now. So you can again imagine, it's like, if they are able to deliver on this, and Frank has done it a few times before, could get real fun. And then it becomes kind of an obvious hodl story. You just have to bet that with Frank's, you know, backing and contacts and his ability to put together good teams, they could actually deliver on this. Unlike if you had a no-name company with no real backer, if they start talking about becoming the next mid-tier, you should probably run. Then West Red Lake, I've had this on my, I remember Pure Gold Mining, of course. It was one of the hottest stocks for a while. So this is the, that's kind of funny. I think this was the main vehicle he was going to use in Canada, West Red Lake. I think that he wants to do the same thing. Put Madsen into production and build and buy from there. Maybe he can do that with 2 stores in Canada. Maybe there's enough projects out there. But he basically want to, you know, consolidate and consolidate and build and grow as fast as he can towards, you know, 1 million ounces. That's typically what his aim has been. And yeah, I mean, if they get West Red Lake or the Madsen mine into production, they show that they can do it successfully. That should be a re-rating event, and then maybe they can, I don't know, acquire some other companies and do all of that. And sooner or later, I mean, it could really become something. I actually I really love the idea of empire building. I mean, as if you listen to the last my last talk when you had Frank Gustra talking, I mean, it's obvious that he sees this as a time to steal value. So it's obvious that that's what he's going to try to do: buy up assets and put them into production when they're cheap to buy, and then have the big payday when the bull comes, and maybe he has a couple of multi-mine gold producers, and who knows what kind of value that could fetch in a gold bull. Integra Resources, recently talked about them on Key Report as well. Kind of a, I mean, yeah, I mean, same play. Look at the first slide. Creating a leading gold and silver producer focused in the Great Basin. 3 ports now. It started with the DeLamar project that was in Integra Resources originally. Okay. The funny thing, this company reached a high of 217 million on DeLamar alone in 2020, late 2020, around the top of the junior sentiment. Now they've added, they merged with Millennium Precious Metals. So they got, I think they have like 8 projects in Nevada or something like that. They have 2 deposits, which I think can grow quite easily. Heap leachable, near surface, oxide gold in Nevada. And then recently, well, it hasn't happened yet, they're merging with Florida Canyon or taking over Florida Canyon. Assuming this deal closes at today's share price, I think the market cap is around 200 million. So use this as an example of how much sentiment plays in. This was valued at 217 million at a lower gold price, but a much better sentiment environment. Now, with not only this, but this and this, a up-and-coming producer, high, you know, low margin, but still a producer with 3 development projects in the pipeline. Well, I guess they consider this one. I think the ounces in the ground is up to above 10 million ounces, up from 4.2. And they're still valued lower than the peak of the sentiment in 2020. That is just incredible. Think about that. That is that says everything about this sector. What kind of the fact that the share price typically is a function of sentiment. Nobody can argue that this company is worth less with 10 million ounces and a producing mine than it was when it had no production and one project and less than half the ounces. That is the obscenity of how this sector acts, just thanks to sentiment. So anybody who says that this sector is so hard, explain to me how you cannot see what opportunities can be found in the depths of a bear market, and explain to me how you can see the most obvious of patterns how this sector behaves. We should not, on a 5 to 10 year period, it should almost be impossible to lose in the junior mining sector. This is how it's always behaved and always is going to behave. Anybody that buys anywhere near, again I'm using this as a proxy in this case, buy anywhere near this box is gonna make money, and sell, I don't know, around this box, you're gonna make money. This is a matter of playing Pong. But if you can't see that and you're only looking at, it's too much stuff. If you're making decisions based on what has happened, you're gonna sell low. If you make decisions based on what's gonna happen, you're gonna buy. So the question is, do you have a time machine? Can you reverse investments? No, you can't. Investing is only about the future. Only. At any point in time, it's only about what could happen in the future. I think it's pretty obvious where the next big move is gonna go. Does that mean that this can't go, I don't know, down 50% before it goes up? No. Does that mean that if that happens, even if you bought today, after it's down 84%, is that also value destruction? Well, that totally depends on your stomach, patience, and rational and common sense and whatever. Because if it goes like this, it means that a buy here that is first going to go down 53%, you will still make 433%. Then there's obviously the threat that it doesn't go down 53%. That's why I think, again, the greatest thing you can do right now is trying to time stuff, short-term trading. I see so many people, they are worried about the downside risk now. That's why they don't buy. Do you think they're worried about the downside risk up here? No, not a chance. They're worried about upside risk. They're worried about upside risk here, and they worry about downside risk here. You cannot make this stuff up. Please look at any junior that's been around for some time and look how they behave. If you're thinking about downside risks and hold off buying, you are never ever going to make money probably in this sector unless you're extremely good at alpha stock picking. This is the lowest low-hanging fruit. Buying, for example, beta here, that's like the broken clock thing that always pays off. But that doesn't mean buy any shitty beta. That doesn't mean buy a money-losing silver mine somewhere that's like, oh, if this continues for 6 to 12 months, it's gonna go bankrupt. Doesn't mean it's gonna go bankrupt, and the shittiest companies tend to rise the most. But in my opinion, I'd rather make sure that I'm a part for the upswing than gamble to get the most out of the upswing. You know, piling into only crap with no money and all that, and hoping, crossing my fingers that it's going to turn in the next quarter before they need to raise or go bankrupt. That's greedy to the other side. That's way too greedy. Yeah. Anyway, thanks for listening. Again, not investing advice. These are just. I mean, if there's plenty of stuff, and there's beta that's quote higher quality. It's just priced more. You have Skina Resources, obviously Rupert, Snowline, and stuff like that. I mean, I'm not saying, oh, these are the absolute best. It depends on the risk reward. I just like these kind of stories where it's like, well, this is obviously been hammered. It's nowhere near a top and has huge metal endowment, even though it's not tier 1 projects. And other stuff like this, and this is more like alpha and beta. It's like proven ounces in the ground, and you have someone who actually wants to build an empire. So I don't mind that. He's done it before and made a lot of money to people. Anyway, thanks for listening. Bye bye. Oh, and not investing advice. Don't invest money you cannot afford to lose. And as per Ian Castle here, it's like, don't assume that, let's say this was a screaming buy. That didn't mean it showed proof of being a screaming buy first. This was a screaming buy, but it still looked stupid before it looked better, and all of that. You get the idea. Thanks for listening. Bye.